So you've doubled your client roster this year, but you don't see the money doubled in your bank account. If not, this 10-minute audit could save you six figures before the end of the summer. So it is mid-July and it is CEO halftime. We're halfway through the year. Our quarter one goals have been completed, and we are not quite yet doing our holiday planning, but I bet you about half of your team is taking PTO right now, which is great. But this causes a sweet spot for CEOs once you get back from vacation. It's really the perfect time to take a look at your financials and find any leaky profit margins, realign yourself with your targets, and gain some clarity as we head into quarter three without any chaos. Because nothing hurts more than discovering a profit drought in December when it's time to pay bonuses and you haven't communicated with your team that you're not going to hit the mark. Hey, founders. Hi, my name is Michelle Mitchell, and I am a fractional CFO and the founder of Mitchell Consulting. I have been running a business for 14 years, working with small business owners just like you to grow their businesses and keep the profit in their business while building wealth. So today I want to go over a couple of metrics for you to take a look at in your business to see if you are on track or not. So the first thing we want to cover is gross profit margins. And gross profit margins are what tells you when you're delivering a service to clients, how much margin do you have? So the thing I want you to do is pull your profit and loss statement for January through June. And I want you to take a look at your total revenue number. And I want you to take a look at all the direct costs related to delivering the service to the client. So that could be employees, that can be contractors, that can be software or anything like that. That's a direct input to the delivery to the client. I want you to take that number, so what those total expenses are, and divide it by your total revenue. And if your percentage comes up at 50% or more, you're doing a fairly good job with your gross profit margin percentage. If it's below 50%, then you are underpricing. So that's a direct indicator that your cost of your services to your clients is not covering 50% or more of your expenses to deliver it. So that's the first thing that you want to make sure you're doing is making sure those profit margins are at least at 50%. If you're higher, like 60 to 75%, then, those are healthy, good profit margins. The next one I want you to take a look at is your operating profit. And your operating profit is all the other expenses in the business minus taxes, minus your payment to yourself, the payment to the owner. And if those operating expenses are at least 20% of your total, then you're doing fairly well. If they're higher than that, you want to take a look at all of the expenses that are going through your business. Now, I know you probably want to pay attention to how much tax liability you're going to have at the end of the year. And I know you've heard people say, well, you can write this off and you can write that off. but how is it impacting your operating profit margin, right? Because we are a business and we're not, if we're in business, yes, there's going to be tax liability, but that means you made a profit as well. So that's not a bad thing. We can minimize your tax liability by having tax strategy. So you shouldn't be concerned about that. So that's the second profit killer that a lot of professional service businesses don't pay attention to because we load up our expenses, but it impacts our operational profitability. So the third one I would like to look at is your cash flow. And you need to understand how much money is coming into the business and how much is going out. We have this thing called float, um, where you have money coming in, but it's already designated to spend. So are we really retaining any profit? Because profit is just revenue minus expenses equals your net profit, right? But what are we retaining? And if our cash is not coming in as fast as our expenses are going out, then we run into a cash flow issue. And that is something you want to pay attention to as a business owner. And if your cash flow ratio falls below 1, then you're in trouble. Like you're in trouble, you're borrowing from the future and you don't know what's going to happen in the future, right? So we need to get that number up as high as we can get it. Now, the next thing that most CEOs fall into is the busy trap versus the sustainable wealth signals. And you see this when your revenue goes up, so it's more like a hockey stick, but your profit is actually flatline or not as big as the hockey stick, right? So that means you're not retaining enough of the revenue that you're bringing into the business. And one of the ways that business owners do the get into this trap is that you are working a lot of hours. You're working 60 plus hours a week. You're always um, fighting fires. You have scope creep in your services to your clients. And you have anxiety about paying payroll. Like you don't know if you can actually afford that number. And it's because you're not paying attention to your financials. And we get in this busy trap. We got to stay busy in order to make enough money so we can have enough cash flow to pay all the things we need to pay. But that is not sustainable. Not for you, the CEO. When you started this business, so that you can have freedom, financial freedom as well as personal freedom. Don't you want to go to the swim meet in the middle of the day on a Wednesday? I do. I did for my children. I was able to go, but it's because I put things in place in the business so that I was able to go and um I wasn't spending 60 hours a week in the business because I learned how to implement processes and procedures and delegate in all the things, right? So today, what we've covered is how to diagnose your financials at the halfway point of the year so that you can go into the remainder of the year with clarity. And if your metric numbers aren't where they need to be, you have time. You have time to correct them before the end of the year. And if you need help getting those metrics in line with where your goals are, then you need to reach out to us. Having a consultation with us is painless. Like, you just bring us your problem. We try to point you in the right direction on how to solve that problem. So, next up in this series, we're going to cover the 5 silent profit killers. in your business coming up next. And then following, we're going to master delegation because guess what? We don't get to learn as CEOs is how to properly delegate. And then we're going to follow it up with the final in this series with a 20-minute review of all of your metrics so that you know you're on the right track heading into quarter three and finishing out the remainder of the year. If you found any of this to resonate with you, please put a comment below because I want to address any of the issues that you have or give you some clarity about any of the metrics that we talked about. And until next time, I'll talk to you soon. Bye.